G'day guys, welcome to the channel. My name's Tim, and on today's episode, we're taking a look at the golden cross of death and why 4 out of the last 3 times that we've had a golden cross at this particular point in the cycle has meant we've had further downside and an extended bear market following straight after. So we're going to take a look at that. We're also going to take a look at the DXY and the bullishness of the DXY, which often means bearishness for Bitcoin, and why I don't believe we'll make higher highs from our current level right now. All right, let's get stuck in. So first of all, let's have a look at this golden cross of death. So what you can see on the screen here is the daily Bitcoin chart from 2011 to the current day. We're looking here at the 50 and the 200-day moving average. So the 50 is the pink line and the 200 is the light blue line. Okay, so we can see here in 2011 at the very start, we had a death cross right here after the blow off top, and we went back down, we bounced, and then we had bullish momentum, and then as you can see, we actually did have a golden cross, but it was short-lived because the price kept going down. Then in 2013, you can see the same thing. After this blow off top, we had the death cross right here, followed by a bounce up off the 50-week moving average, which we've seen in various other videos in this box area. Then we had a golden cross here, and you can see that the golden cross, we barely even went up. We just turned over straight away and had another death cross. We just went straight into a bear market. Now in 2017, now this is the exception. Now we had the blow off top, we had the death cross right here, and we never even had a golden cross. It was just very much a bearishness right through until we bottomed out. So there was no golden cross in the 2017-2018 cycle. Then in 2019, 2020, again, we had the death cross followed by a golden cross, followed by a capitulation event, which was COVID. Now, of course, we could argue that was a black swan event, but 3 out of these 4 occasions, on every occasion except 2018, we had a death cross followed by a golden cross followed by more bearishness. So I wouldn't get too excited the fact that we've had a golden cross here on the 250-day moving average. Okay, now let's have a look at the DXY, the US Dollar Index. Now there is an inverse correlation between this and the Bitcoin price. As the DXY goes up, Bitcoin generally and other speculative assets often go down. And you can see here we had a W double bottom on a monthly time frame, and a monthly double bottom is no joke. Now on a weekly time frame, we've had another W double bottom, and the last 2 days have been green. They've been quite strong. Now we might have another pullback like that. We'll have to see what happens, but there does seem to be somewhat of an uptrend for the US dollar index, and this is not generally a good thing for Bitcoin. Now, what might be causing the US dollar to go up could be some instability in the stock market. Now, what we can see here, this is the S&P 500, and you can see there has been a bit of a sell-off in the last couple of days. This is a daily chart. There's also this rising wedge since the Corona dump way back down here. So you can see that it is setting itself up for something, either upside or downside. But at the moment, there has been some selling off in the last week. It has been a very volatile week, and that is perhaps causing the US dollar index to go up in response to what's happening in the stock market. Now, the next thing I'd like to take a look at here is the Bitcoin dominance, because we have noticed in the last couple of days, it has started to turn up. Now, it's still very early, maybe too early to call. However, if we have a look back in the 2017-2018 cycle, right here. Now, this is the section I believe we're in at the moment, when we've had a peak, and then the prices come down, and then we've had bullish momentum going up for several weeks in a row. You see all those green weeks right there? Very similar to what we're seeing right here. And in fact, on both of these occasions, we bounced off the 50-week moving average right at those points. So it's a very similar point in the cycle, I believe. Okay, so let's have a look here. Now, at the very peak of this bounce was the end of April, and the dominance was right here at about 40%. Now, if we assume for a minute that this is the peak up here, then the dominance was at a very similar level around that 40% mark. Now, as we went down the hill, you can see that the dominance basically increased from the start of May right until the 3rd of September in 2018. So over several months, the dominance was increasing. It was basically just on an uptrend. There was a slight little deviation right here, almost like an ABC correction or a 1, 2, 3. And right now, we're at the top here at about 40%, and we've started to work our way down slightly, and you can see that there's a bit of a lip right here. We're at about 42%. So if we are to follow a similar pattern to what happened in 2017, 2018, the dominance could be increasing from this point forward. Now let's take a look at the dominance again, and I'll just prove this point a little bit more. So what we can see here, this is the 2017, 2018 cycle. This is when Bitcoin peaked at the end of 2017. Now in 2021, this is where Bitcoin peaked on the 14th of April. Then it went down, up, down. Very similar. Down, up, down. Okay, so on both occasions, it's very, very similar. Now this point here, this was early May in 2018. This was the peak of that dead cat bounce, okay? Now right here, this is the peak so far of the dead cat bounce, if it is a dead cat bounce, that we just had. And you can see that we're starting to work our way upwards again. Now again, this could come down, it could do anything, but at this stage, you have to admit that and that look very, very similar, especially after following that pattern on both occasions. Now let's have a look at Bitcoin on the 4-hour chart. Now this is the big drop that we had about a week ago, and the price has been going up and down, and then we've had a little bit of a rally, we've gone down a little falling wedge, we had a little bit of a rally. So what I've done, I've also marked in this trend line here, and we can see that Bitcoin has respected this blue line here on several occasions. There's 1, 2, 3, and now 4. So we've been rejected on these 3 occasions here. It found support there, and then we've been rejected on these 3 occasions. So this trend line has a lot of credibility. Now, I've also marked in a Fibonacci retracement. Now, you can see here, this line right here, this is the 618 retracement level. And this is a very common area for charts to retrace from, or retrace to. So you can see we've gone down here, and at the moment, we're working our way up to the 618. So there's a very high likelihood that we will get somewhere in this region. And whether we go up from there or go down, like we don't know at this stage. But there is a very high likelihood that we are still working our way up to that point. And I believe right here where this trend line here and the 618 converge, this could be the area to keep a real close eye on. So maybe Bitcoin does something like this and comes up. Maybe it does a bit of a fake out and comes back down. Maybe it goes up higher again and we reach all-time highs. We'll have to see how it plays out, but I would be keeping a very close eye on this particular area here, which is where Bitcoin would be at around 49.5K. So that region there, that's the area I'd be keeping a very close eye on. Okay, finally, just a quick update on where Bitcoin is in the current cycle compared to the 2013 and 2017 cycles. We had the 50-week moving average moving through like that on all occasions. We've had the bounce up, which we've had on all 3 occasions. We've turned around on all 3 occasions, or on those 2 occasions, we're starting to turn around now. Now, some people think that, we're going to reach all-time highs. We could go up like that. Now, it could happen. However, I have my doubts. I have very strong doubts that will happen. And if we look back over these previous cycles, there was, right at this point in the 2017-2018 cycle, there was a stock market correction, a massive correction in December 2018 that caused this capitulation. There was also a massive market correction right here in August 2015 that marked the end of the 2013, 2014, 2015 cycle. Now, currently, the stock markets have been going through a bit of a sell-off. Whether it's going to be a massive correction or not, it's a little bit too early to call. But what we've seen in previous years is that somewhere in this region, that's when there has been a market correction, a fairly large market correction in the stock markets. So typically, the more speculative assets tend to go down first as a leading indicator before the stock markets go down. So I would be expecting Bitcoin and crypto to go down first before we see any major crashes in the stock market. And we can see that happened in these 2 previous occasions. You can see that we were just downhill from these points forward, and then the stock market crashed here. Now, I'm expecting if we follow a similar pattern, and this time is no different from the past, maybe something similar happens, that crypto and Bitcoin go down, and then somewhere in this region, somewhere in 22 perhaps, in 2022, the stock markets have a much more major correction. And the final reason I think Bitcoin is not going to reach any more all-time highs in this current cycle, and if it does, maybe a double top at best. But the reason I think we're heading down is because of institutional investment. There just simply isn't enough. What we're looking at here is the Grayscale Investments holdings. Now, apart from Michael Saylor, who just keeps buying Bitcoin, eventually he's going to run out of money. But for most other institutional investors, they essentially stopped purchasing around February in 2021. And you can see here that it's just been it's been basically steady. You could argue a slight decline since, but institutions are not buying at the moment. It appears that this current rally is mostly driven by retail. So in summary, with a retail-driven rally, with a rising DXY US dollar value, with turmoil in the stock markets creating some uncertainty for speculative assets, the Bitcoin dominance following a very, very similar pattern to what happened in 2017, and it's starting to go upwards in a bit of an uptrend. The resistance levels that we've been respecting on multiple occasions, the 618, which is a very common area to be rejected at. All these reasons make me believe that it's more likely that Bitcoin is going to go down as opposed to going up. Now, if it does go up, it is possible, like anything can happen. Bitcoin does surprise, but I don't believe we're going to see any significant all-time highs in this current cycle. I believe this cycle is heading downwards. So anyway, I hope you enjoyed that video. I could be wrong. These are just my opinions, not financial advice. We have to keep an eye on the data and the trends, look beyond crypto, look at the stock markets, look at what the institutions are doing, look at the Bitcoin dominance, look at where we are in the cycle compared to previous cycles. We can learn from the previous trends. So we'll see what happens in the coming weeks. It's going to be fascinating. It could either go up, could go down. My feeling is that we're more likely to go down. Anyway, that's all from me. Please subscribe. Please like the channel. Follow me on Twitter at TechnicalTimCR1. Thank you so much for the comments. We'll have to pay attention to what happens over the next couple of days and weeks. This is really fascinating. So until next time, I'm Tim, and cheers.